We've had a busy week in the markets. A lot has gone on, triggered really by the sort of banking crisis started with Silicon Valley Bank. I wonder for you, who runs a company that actually makes things, sells things in the real world, what effect does it have on you?
Well, first, the good news is that we have no material exposure to the regional banks. The banks involved, particularly, they're more broadly the regional banks, so we're protected there. Our relationships are with the bulge bracket banks.
So rates are lower, but do you see any tightening of credit? Do you see any reluctance to extend credit at this point? Is that picking up at all? Or do you have to anticipate that possibility?
We have to anticipate that possibility. We haven't seen that yet, but rates coming down is overall a positive thing for our market because, you know, we look at some of the rates going up has had a dulling effect on the new housing market. So we should see some benefit in housing as rates start to come down. And our larger customers on the property side, as rates come down, that'll be a positive thing for commercial construction as well.
We have the Federal Reserve meeting next week, and there's a lot of debate about what they're likely to do. Talk about the other side of this equation. We're seeing the situation with the banks, a real need to support them. At the same time, we do have inflation. We're still getting inflation numbers on. How does that affect carriers' business?
Well, if you're a company that has the ability to raise price and keep price, but also reduce costs, that spread can be very beneficial. So we look over the last 18 months, in many of our businesses, we've raised price 6 times. So we've been coming off very significant price increases. We raised price over $1.5 billion last year on a base of $20 billion. So we realized last year over 7.5% of price increases. While we have been experiencing inflation, we look at this year, inflation's not over. We came out with new price increases in January to kind of keep pace with the inflationary pressures that we see. But at the same time, we will be brutally tenacious on taking costs out of the business. We've reduced G&A from 9% to 7%. We're going very aggressively after working with our supply chain partners to really partner with suppliers that want to be on the journey with us to take costs out. We're going back after the basics of getting productivity in our factories. So maintain increased price as appropriate and then aggressively reduce costs.
Are you facing much pressure on the labor side?
We are. It's mostly acute in the United States. We don't have as many, we have about 55,000 people, 80% of them are outside the United States, and most of the labor pressures we see still are in the United States, but we're starting to see some loosening there.
Where are the customers right now, and maybe where are they moving to? How is your business changing?
We look both geographically and by vertically. Geographically, it does look like slower growth in the United States and Europe, but I will tell you, I was just in Saudi last week. The opportunity for infrastructure spend in Saudi Arabia is tremendous. It's a once-in-a-generation opportunity. We met with the PIF that has more than $700 billion that they're investing. And with the giga projects that they're investing in, they're going to invest more than $700 billion in NEOM, in Roshan, a housing project. So we want to be front and center as they build out significant infrastructure in Saudi Arabia. India looks very encouraging right now. So we want to invest very strongly in India. And I think China is going to surprise to the upside. There is this geopolitical cloud between the United States and Europe and China. But I will tell you that if you get beyond the cloud and you look in the trenches, there is really strong opportunity in China. And what we've done in China is shift our focus from property and real estate over to the industrial and infrastructure side. It was 70-30 one way. Now it's 70% I&I infrastructure and industrial. So we see a positive opportunity in China. And then we look by vertical, we just got to shift for where there's more opportunity. So data center strong. The CHIPS Act is bringing more investment into infrastructure and industrials in the United States. We look at low end on certain parts of real estate look very encouraging. So we have an ability to shift some of our focus, and we're landing some very encouraging deals.
Here in the United States, you mentioned sustainability earlier. Tell us about the Inflation Reduction Act, some of the other issues, such as the bipartisan infrastructure bill. What is that doing to your business?
It's significant. You look at the Inflation Reduction Act, $370 billion is going to be spent on clean energy, and we expect to be a big recipient. There's going to be a $2,000 incentive to go to heat pumps. Heat pumps is a very significant trend in the United States. 35% of all of our split systems that we sell for air conditioning for homes today are heat pumps. So if you can use that $2,000 incentive to shift from not only cooling only to a heat pump, but use it to shift to a variable speed, more energy efficient heat pump, that will have a very significant impact.
No, and as you suggested, maybe the situation with bonds right now may make it a little less expensive for you to borrow in order to make acquisitions. Is the government going to let you do it, though? We have a Biden administration that is very aggressive, at least in how they talk about antitrust enforcement. Are there big deals out there that you can take a look at, or are you precluded by regulatory risk?
I will tell you there's still very sizable deals that we could do that have no regulatory antitrust implications. So You know, we're very clear-eyed about some of the challenges with the administration right now on getting certain deals through with the antitrust situation, but there are a lot of very significant deals that have no horizontal overlap that present great opportunity for our shareholders.